Inflation rate has fallen to 3.4% in May. That's the lowest level it's been in almost 2 years. The consumer price index rose 3.4% year over year last month, following a 4.4% increase in April. So this is the smallest increase since June of 2021. Bloomberg's Erik Hertzberg is standing by with more for us this morning. Erik, good morning to you. So break down this latest report for us. What's driving the numbers?
Hey, yeah, well, as you mentioned, we did see that deceleration on the headline figure come down to 3.4%. A lot of that is driven by gasoline prices coming down from last year. So something we have to keep in mind here is that a lot of the change that we're seeing in the headline number at this point is because we're comparing to very high levels of inflation of the index itself previously. So if you look through the details, you do see a general slowing of inflation. If you look through the core measures of inflation, you even see that slowing as well. So there's an important measure that's watched by the Bank of Canada. That's the 3-month moving annualized of some core measures that strip out the volatility of energy and food prices. That is still running around 3.72. Now that's eased from last month as well. It was 3.82 previously, but the Bank of Canada is focused primarily on this area and wants to see those underlying price pressures come down. Overall, we do see food prices remaining quite sticky at around 8.3%. That's on a yearly basis. But we do see things like service inflation starting to come down. So overall, I think for the Bank of Canada, they're going to see this report as somewhat of a relief. Traders and people looking for out for the next the outlook for rates, they're undecided on this. It looks as though it still looks as though the Bank of Canada will end up raising by another 25 basis points in July.
Okay, I think a lot of people were hoping this morning when they saw this headline that maybe the Bank of Canada would be so pleased that they would pause and maybe not have another interest rate hike. So does this mean that all the previous hikes, Erik, are working? Is it paying off?
Yeah, I think the way to look at this is that we're not out of the woods yet when it comes to inflation, and I think the Bank of Canada would agree with that. Now, you bring up an interesting point here, which is that a lot of the hikes that we've seen over 400 basis points of hikes since last March. That's a lot of tightening and a lot of pressure that's been put on consumers in this country, but it's just not translating into a slowdown in economic growth. Now, that's something that the Bank of Canada has been entirely preoccupied with in its last and recent communications. Indeed, that is the reason, the primary reason that the Bank of Canada decided to break a conditional pause that it declared in January to deliver another 25 basis points of hiking at the beginning of this month. It's just that the economy is running too hot. So the rate hikes are lagged. That's a known thing. There's long and variable lags, they say, amongst economists that still have to hit the economy and slow things. We're just not seeing that slowdown. So this Friday, we're going to get gross domestic product numbers from Statistics Canada. That will give us a better indication as to whether or not the increases in interest rates that the Bank of Canada has done in the past is actually going to bring everything down, slow down the economy, and get price pressures better under control. But overall, if you look at just this print today, if you look at only the inflation numbers today, you would see there is some slowdown happening, but it's not enough to keep the Bank of Canada from continuing hiking.
Gotcha. Erik, thank you so much. Bloomberg's Erik Hertzberg in Ottawa.